We're live from New York.
Hey, live from Chicago, Saturday morning, multifamily unplugged. That's the new feed, Moose. Live from Chicago, Saturday morning, multifamily unplugged. Hey, welcome everybody. Good morning, Chicago. How's it going? Anybody ever see that old Robin Williams movie, Good Morning Vietnam? God, am I old?
That's based on a true story. There was a real radio guy, real personality.
Absolutely.
What if you're not in Chicago?
You're here in spirit, Chris.
I don't know.
Yeah, so
I still haven't had enough coffee yet.
Okay, so I just pinged a couple people, let them know that we are live. Looks like we've got some conversations going. Boy, there's some people I'd love to check in this morning. All right, let me kick this thing off. Just so everybody knows, we are live on Clubhouse this morning. So if you're on Clubhouse, I just want you to know that there's no interaction there. We are also live on Facebook. And we are also live on Zoom. And if you have anywhere that you want to leave a message, put a chat, ask a question, make a comment, ask Carl how late he was out last night. And listen, here's what I got to say about Carl. He was a good boy last night.
I did. I went home, man, before you.
You went home before me. Yes, you did. Not that I was bad. I just dropped you off. Then I had to drive home.
Yeah, exactly. So, Mike, are you live on Clubhouse? I'm showing it's not. It says it's asking me to start the room.
It shouldn't be asking you to start the room. I am in multifamily unplugged on Clubhouse. Let me try this. Let me try pinging you.
Gotta be smarter than the app, Mike.
That's kind of hard to do sometimes, Chris. Chris, where's your little honey there from Ohio? I'm from Ohio.
Well, I was from Ohio too, I mean,
your
I was
mic
born in
talk, Carl.
Cincinnati.
There you go. All right.
Oh, that's right. You're from Cincinnati area, right?
Yeah.
Hey, let me do some housekeeping, guys.
Stuff,
So here we are, Saturday morning, multifamily unplugged, live from Chicago. We are on Facebook, Zoom, and live on Clubhouse. So if you're listening to us on Clubhouse, good morning, Emily. Just want you to know that there'll be no interaction on Clubhouse. If you do want to ask a question or that, you go to Facebook, leave a comment, throw us a comment. You could use the back channel on Clubhouse. I'll watch for that to come up. Let me just say this. I just want to tell everybody, we've been into this thing now, Carl, you and I, for over a year. And I just want to thank people for being here, hanging around, coming back every week. We have a lot of interaction with people, and I think that we've put a lot of great content out, a lot of good information out for people. Last week or the week before, we had a conversation around language in the multifamily business, terms, things like that. We've talked about underwriting and how to find deals, and we've talked about all kinds of things. And you know what? Our commitment to the community is that we just continually bring good, fun information, totally uncensored, totally live, and who knows where we go sometimes. I always tell people go, what do you talk about? I say, I don't know. We talk about whatever comes up. We wind up in some rabbit hole trying to figure out how to climb out. Let me say good morning to Trevor, to Chris, to Emily, to Edna. Thanks for being here. Listen, if you have questions, use the back channel on Clubhouse, use the chat on Facebook or Zoom, and we'll get those questions or comments answered for you. And please, as housekeeping, we always ask if you would please go to wherever you get your social media fix, whether that be Twitter, Instagram, Facebook, LinkedIn, we're everywhere. So you can follow me, Mike Morawski, or you can follow My Core Intentions. You can follow Carl Moose. You can follow Your Focus Guy, and like us, love us, subscribe, whatever it takes there. And looking forward to being able to deliver more content, more information, more stuff to you. Hey, Carl, we got a couple other things going on too that we probably should let people know about. Some clubhouse rooms, some events coming up. You got some events. I have some events coming up. Some free, some paid for stuff, but there's a lot of content out there. So why don't you talk about some of those things, and then we'll circle back, make sure we covered all the bases.
Yeah, it's amazing, Mike. We've been doing this for over a year now. It doesn't seem like that, but yeah, we've got. I mean, I don't even know how many episodes, but and I'm excited about being on Clubhouse. Thank you for getting me involved with Clubhouse. It's a great platform. I just pinged about 20 people, so I have to get a little bit better about that, about letting people know what's going on. But I think that's a really good platform too. And of course, this conversation is about multifamily. Which is a different topic than what I normally talk about. Mindset has something to do with that. But I'm your focus guy, and I've got a program coming up November 1st. We're doing a 13-week program that is it's a paid program. People do pay me to facilitate that conversation. So I'm excited about that. And then next week, I'm excited about being out at your event, that live event in Chicago, which there's still room and an opportunity for people if they want to join us or join you, for that intensive training. I highly recommend they do that. So when is that? Thursday, Friday, Saturday, Mike?
Yeah, it's Thursday, Friday, Saturday this week, and it is, it's going to be filled with networking opportunities. It's going to be filled with the ability to build some strategic alliances, walk away with some partnerships. And I'm going to, people, my goal is that you walk away with a 13-point blueprint that will help you take your multifamily business to the next level. And whether you are buying your first property or whether you're buying your next property. So we're going to talk about underwriting. You know what? Here's one of my focuses right now, Carl, is that people need to learn how to underwrite better. And
Yeah.
one of my conversations lately around that has been this, that the market right now looks like it's going to go into a deep chasm. Let's call it that. I don't know where it's going to go. I don't know. Any of us have a prediction or a projection. Some think it's going to fall out. Some think it's going to continue to skyrocket. Honestly, my opinion is that over the next 3 years, I don't think much is going to happen, because I don't think that the Democrats are going to want Trump to come back and run on the fact that, hey, and not to make this political, because this isn't at all. But I don't think the Democrats want Trump to come back and say, hey, look what they did to the housing market, right?
Yeah. Yeah.
So I think they're going to keep the housing market pretty stable. They'll feed some more money. Interest rates are going to go up, which means we're going to see inflation set in. So product is harder to get. Product is more expensive. We're going to see interest rates go up. We have now all of a sudden this pipeline constraint, and we're going to see inflation. So here's what I tell people right now. If you're not in real estate, get in it, because there's an opportunity to hedge yourself against all that inflation and all that stuff. Back to the underwriting conversation. And underwriting, just so people know this, underwriting is just a fancy word for taking all of the numbers, the financials, all your income, all your expenses from an offering memorandum on a property that's for sale, putting it into a spreadsheet and looking at it, doing a stress test on it to see if the deal is worth buying, if it's worth doing. And here's what I know. When I first got in the business, and I teach a little class, but when I first got into business, I didn't have a fancy spreadsheet. I didn't have a tool. So I did everything by hand. I had to write all those numbers by hand. And as I wrote those numbers by hand, I learned what needed to be done. So that's one thing that I teach people is, how do you underwrite by hand? But I want people to be more proficient around it, because it's so important today. I think where the market's going and where we're headed.
Can I just jump in there, Mike? That's an important point, because real estate has been around. Some say it's the oldest business in the world, right? When people started looking for shelter, and doing it old school that's not a bad thing at all, because when I started off, I was the same way. I was a banker, and I got trained as an analyst. I was analyzing properties that were coming in from people that wanted to get a loan. And so we did a lot of that, just exactly what you're teaching, longhand. And, it's funny, I have teenage kids right now, and I help them with their math, right? Which, the new math, whatever. Well, my father had a slide rule. I mean, literally, I grew up in the 60s, and my dad had a slide rule. I mean, we didn't even have a calculator. And I show my kids how to do their math longhand, because there's something about that. It actually sinks in a little bit deeper, I think. And I think it's a really good practice that you put your students through, to do some of that analysis longhand with a piece of paper and a pen. And I know that that's how you do it. because it sinks in, and you really have to think about it. You're not just crunching numbers. You're actually thinking about what you're putting down on that paper and saying to yourself, does this make sense?
Right.
Does this expense ratio make sense? Does this, deficiency ratio make sense? Does this tax rate make sense? Right? Doing these insurance numbers make sense. And I think that's really important for people to understand, because when you do it that way, you're not just crunching numbers. And I think a lot of people get into trouble by doing that and not really thinking about what they're putting on paper.
Yeah, absolutely, absolutely. Hey, I want to just say hi to everybody that's out on Facebook this morning. A lot of listeners out there this morning. Thanks for the comments and the chats. Just good morning, everybody. Thanks for stopping by. I know I've sent some messages to people. Glad that you're here this morning, whether you're on Facebook or joining us live on Zoom and Clubhouse as well. So trying to cover some of the mediums today. Chris, what's up?
Hey, Mike. Hey, Carl. You know what? You're talking about an ambulance going by or whatever.
Hey,
but
somebody got shot. I live in a neighborhood where that happens a lot.
Well, so I don't know. For those of you who don't know who I am, I was in the brokerage business. I investment professional, my own broker dealer, hedge fund, RIA, commodities, IB, blah, blah, blah. And I've always been around numbers. And whenever I talk to somebody about asset allocation, in other words, what do you do for an asset, as an example, if you have a stock portfolio? Let's say you have stocks in your 401k. How can you counterbalance that with an asset class that is what's called covariant? In other words, it's like a teeter-totter. Stocks go down, real estate goes up. That's what we talk about when we do asset allocation. But I think the most important thing, because I've sold a lot of REITs and packaged products that have investments in real estate, the thing that's most important for people to realize is that you have two choices whenever you invest. You can be passive and let somebody else do it, or you can be active and do it yourself. Mm-hmm. And for the last basically 40 years since I've been investing, I found that the people that invest actively and take the responsibility for themselves always do better. And here's why: because if you have somebody else do it, like as an example, a REIT, which is a real estate investment trust, they go out and they do all the work, they buy the properties, et cetera. You're going to get a little piece of that pie. But when you're active and you do it yourself, you're going to get a whole lot more. And the interesting thing, and the thing that I learned last week, which was great, and Carl, you alluded to this too, that Mike, you said, well, what about valet service? What about selling your parking spaces near the door? People are basically lazy and they want convenience. I mean, think about why Amazon is so successful. Push a button, it shows up the next day. Well, that's great. And if you are interested in investing in real estate, I think the thing that you have to realize is that if you just throw money at it, as in a REIT or any kind of prepackaged Wall Street real estate deal, you're going to get that little piece. But if you're smart enough to realize that you just go to Mike's event next week and you have Carl teach you that mindset, because what goes on is mostly in between here that makes you successful, you're going to have a tremendous amount of success. So why not spend the money and get that additional big spread of what you would normally give to a prepackaged investment in real estate? And I can't think of a better thing to do today because of all the, we have 30 trillion in national debt. I'll shut up because I could go on for the whole hour. But the point is, if you really want to start with the end in mind, and it goes back to, those books over there that Mike is talking about, the end game, you need to have some plan and really take hold of it and do the thing that's necessary. And do it yourself, because nobody is going to look out after your money better than you are. And when I had clients come in, whether it was somebody that had 20,000 to invest or somebody that literally had 400 million to invest. And I'll tell you, the guy that had 400 million that I met down in Marco Island, Florida, his name was Don Roberts. And I can say that now because he's passed. He had a $400 million net worth because he invested in real estate and did exactly what Mike is talking about.
So here's what I got. You got my attention this morning. So let me just say this too, for people who don't know, our guest didn't show up this morning. So we are just we're running down a rabbit hole here. That if you want to participate, please, raise your hand. Let us know you want to jump in. Trevor, you're coming up next. So I just want to comment on this though. Um, I want to say you don't have to have $400 million to get in real estate. You can start with nothing. I got in real estate as a sales agent. I sold a bunch of property, but I mismanaged my money. And when I went in the apartment business, I didn't have any money. I raised it all. I syndicated all my deals. And so, what's interesting is I talked to a broker yesterday, a sales broker, and here's what he said. He goes, listen, I'm really getting in this multifamily thing right now. He goes, the reason I like your passive investment stuff is because I don't have to do any of the work. I made a bunch of money selling houses this year, and I need to put some money somewhere. He goes, your barrier to entry is low on your passive deal on this deal we're doing in Tampa. He said, I can get in there, I can put some money on the side, and I can start to create some wealth. And he said it all. I never said a word, right? So it was just interesting how that conversation went. And I think there's so many people that have cash on the sidelines, whether, that's the thing I'm finding right now. There isn't a lot of dry powder on the sidelines right now, and people looking for an opportunity, a place to put it so that they can benefit from it down the road. And the two things that I teach are how to create cash flow and how to create long-term wealth. Because I think, and I've preached that for years, right? Because I think that that's so important. Hey, Trevor, what's up? How you been? Trevor's got us on record, so go ahead, Moose.
Hey, well, he's got his mic going, but both you guys bring up a good point.
There he is. There he is. Trevor, you're on mute.
You're muted.
I was driving. Now I pulled over.
What's up, Trevor? How you been?
I'm doing awesome. I'm actually in San Antonio checking out some apartments that found off market, which is the first time I think I got a good off market lead. So I'm very excited.
Yeah, nice. Good for you.
Yeah.
Yeah, you don't find many of those. I'm actually coaching a broker right now. He's at God, I can't remember what brokerage he's at. But his big focus right now is he's going to look for off market properties that he can market, because he knows that there's some buyers out there, guys like you, that want to find that type of product. So I think there's a big opportunity out there for it. So
there definitely is. And I have a couple of brokers that have been looking, but it's super hard in the hot market because owners are just getting all the time, hey, you want to sell? Do you want to sell? Do you want to sell? Do you want to sell? They're getting inundated with people chasing them to buy.
Right. Yeah, Trevor, it's like anything else though, right? It's like you got to build relationships. We're in a relationship business, and unless we're building, and here's the thing. I was on Clubhouse this morning early, and I said, man, we have to be building quality relationships, right? They can't just be relationships, because people have to know really who you are, because nobody cares what you know till they know how much you care anyhow. So
that's absolutely true. Yeah. And you just got to keep showing up. You got to keep looking, keep showing up, keep networking, and connecting with people that you first give them some value, and then hopefully they can give you some value. It's very important.
Hey, let me reset the room real quick. Good morning, everybody. If you're on Clubhouse, welcome. Michael, good to see you. If you're on Clubhouse and you got a comment or you want to make a comment, use the back channel there. If you're live on Facebook, please use the chat. Feel free to step up, ask a question, ask, hey, if you're thinking, man, I got some money in a 401k or in a retirement fund, and how do I use that? Or I have some equity in a house that I own. How do I use that? Ask questions that we can maybe get some answers for you to help you, on your real estate journey. And then we're also live on Zoom. So, whenever you want to participate, feel free to just reach out. What's up,
Mike?
Carl?
I want to comment. Yeah, I want to comment on what you and Chris said earlier, because and for those of you that don't know what a REIT is, it's kind of a mutual fund for real estate. That's what a REIT is, a real estate investment trust, and that is something you can go into the market. It's a publicly traded, on exchanges, and you can buy passively into that. And Chris makes a good point. If you really want to take control of your destiny and control your money, you want to be in control of your investment and your real estate. And then I just want to piggyback off that to your point, Mike. Now is the time to buy real estate. What's the old saying? The time to plant a tree is now. The time to buy real estate is now, right? You don't want to be 5 years down the road or 10 years down the road and say, gosh, I wish I would have bought back in 2021, because the reality is the markets are always going to be fluctuating. They're always going to be going up and down, and nobody, I don't care who you are, how smart you are, you can't predict the future. So, be smart about your underwriting and what you're looking to purchase. And if you don't have a boatload of money, because most people don't have $400 million, obviously, there's other ways to get into real estate. And you'll like what Mike was talking about, exactly what I did when I first bought my 18-unit building. I went out and I found the deal. I pounded the streets, I found the deal, and then I went to networking events, and I found people that had money that were looking to invest. And you have to be careful when you do that, because you definitely have to be careful about how you approach people. However, the point is, if you don't have money, it doesn't mean you can't get into real estate. Go out and find the deal. Go out and bring some value. Like Trevor said, bring some value to the table. And if you find a good deal, the money will come, because we've all known that, right, Mike? I know you have. You find a good deal, the money will show up. So don't sit there and think that you have to have a boatload of money to get into real estate, because the reality is you don't. If you bring value to the deal, people will jump in with you.
Yeah, the guy who ended up with 400 million, he was just a little farm boy out in western Minnesota, started with nothing.
Yeah. Hey, Carl, I think in Think and Grow Rich, there's a number, he says exactly how many people have created wealth through real estate. Maybe it's not Think and Grow Rich. Maybe it was a different book, but and there was a conversation on this Clubhouse room this morning about wealth that was created in the world, and the number that they talked about I thought was really short, right? I think it's like, isn't 80% of the wealth that's created in the world created because of real estate? When you look at the Rockefellers and the Trumps and even the Bidens and people, Clintons, people have created wealth, Kennedys, it's,
Well, and Chris, I'm sure you could attest to this. Truly wealthy people have a couple things in their portfolio. One of them is equities. They own companies or parts of companies. And the other one is real estate. If you want to build true legacy wealth, right? Long lasting, true wealth, right? Not nouveau riche wealth. Real estate is part of that mix. Chris, would you agree with that?
Yeah. I've seen there really is only two kinds of investments you can make in the world. One is ownership, and two is debt. Now, there's going to be people that are going to be super scared to do anything except put their money in the bank. And my ex-wife was like this, just put the money in the bank. Well, at 0.5% a year, you're not even keeping up with inflation.
Yeah.
And so the key is to use equity or ownership, and it doesn't matter what it is. In the 80s, I bought Upper Deck baseball cards. I bought a pallet full of them. And I think I spent $3,000, and in 5 years, I sold the thing for 10 times the amount. So I own that, and equity is just ownership. And it's no different whether it's an apartment building or Chinese Oriental vases or art or whatever. Ownership is the thing that's going to build that generational wealth. And it's what you do with it and how you deal with the taxes. And that brings me to the next point of, if you own real estate, you can pyramid your wealth because of that and push those taxes out. Effectively eliminate taxes if you really want to do it correctly. So you have multi-generational wealth. And that's kind of my deal, is the tax deal, because I've seen a tremendous amount of wealth go away in families. My own included, because my great-grandfather started Kroger grocery stores, and we've seen a lot of money go away unnecessarily because of poor planning. But that's a whole nother story, which I'm not going to jump into.
Hey, a friend of ours who opened a grocery store here in the Chicago market recently, I understand they all went upside down and are no longer open. which is kind of interesting. You know, um,
And again, just to jump in, equities when and you're right, ownership is the key. And another thing someone told me a long time ago, which goes, and this could be a whole nother topic, is really wealthy people don't own anything; they control everything. In other words, they own it in trusts or they own it in other entities that they control, and they do that primarily to protect their wealth and to minimize their tax liabilities. But and that's a whole nother topic. Again, ownership is the key. Whether you own real estate or you own equities in hard assets or companies, that's how you build true wealth. And don't you should start now. If you've never owned, listen, everybody, unless they've inherited a portfolio of property, which are very few people that do that, but most people that are successful in real estate start with one property. They start with that first property, and that's the key. If you haven't started yet, go out and find it. Don't be in a rush, but go out and find a good property and let it unfold, because you're going to learn a ton of lessons from doing that, and you're going to start the process.
and not necessarily the property you live in either, right? I mean,
Right.
that investment property, I think it was Gary V who said, and I subscribe to a lot of stuff he says. Some of his stuff, I subscribe to a lot of stuff he says. And he says, look, before you buy a car, go buy a piece of property. Before you buy a house that you live in, go buy two pieces of real estate, you know. And he's a big trading card guy too, right? Especially right now, he says that whole market's going to come back. So Chris, maybe time to go find that pallet.
But
Well-
what's his point, Mike? Buy an asset that's going to pay for the car, right? Buy an asset that's going to pay for your living expenses. Isn't that his point?
Cash flow and long-term wealth, right? There you go.
Cash
Trevor,
flow.
hey Trevor, how long have you been in doing multifamily now?
Yeah, so 4 years. Started 4 years. And one of the points I was going to bring up is that a lot of people don't realize this, that when you passively invest into a syndication, you actually own a portion of that real estate. You get a portion of the tax benefits. You get a portion of everything except for the risk, because the sponsorship team takes the risk. And so they take the risk of signing the loans, doing the work. And so it's somewhere in between, owning it and having to actually do some work, because that intimidates a lot of people, especially if you have a job.
Right.
Now, I often joke, some of my passive investments I've invested, I own a doorknob, probably a little more than a doorknob, but you own a portion of a real estate investment. And because of that, you get your passive income. You get the pass through of the depreciation and all the different tax benefits. It gets taxed as capital gains. When I know it's not a tax class, but there are, as a passive investor, which I was in 14 deals. As you know, I just did my first active. I'm doing it now. Can't talk about it, but anybody at my future, they want to come, I'm going to do more. That's why I'm driving around San Antonio today. But, you can do well being a passive investor. I did it for 4 years. Like I said, I'm in 14 different deals across different asset classes, multifamily being the biggest. But a lot of people don't understand that they actually own a little piece of the real estate.
Mm-hmm. So let me ask you about that. So you can't talk about the deal because it's going to be a 506B?
Yes, that's correct. Yeah.
Okay. All right. And just so people understand what that means, a 506B is it's a private offering that is not publicly, cannot be publicly displayed, talked about, marketed, advertised.
Yeah.
But until in a point in time when the sponsorship team is going to go and try and raise the rest of the private equity to close the deal.
Right. And that goes back to your networking question, right? The people that we're approaching to invest in our deals are the ones we've been networking with. We have to have a subsequent relationship. We have to understand your financial needs. So it's really important, if you want to do this type of investment, that you get to know somebody very well. Know, like, and trust very well. Know their history, understand what they're doing. And then once you have that relationship, you can invest in their deals. And with that, you get a portion of the profits.
Yep. Yeah, Trevor, that's a really important point, because, for those of you that know my history, don't know my history, I got myself in hot water with a wind energy investment years ago, back in 2004 or whatever. I ended up putting an LLC together. We bought 3% of this company in that ended up failing. And I brought 18 investors together, and some of them I knew and we had done business together, and some of them I didn't. And that's where I got into trouble. I look back, I said I should have never worked with those 4 investors because I didn't have a relationship with them. How that came about was, there was a gentleman, I'm not going to name any names, but there's a gentleman, his first name began with S. He had a brother whose first name began with C, and C brought these other investors who I had never met before. I'd never done business before. And it ended up, when the whole thing went belly up, the California company didn't go belly up, but it didn't perform. I got myself in hot water. So, you definitely, if you're out there finding a deal and you're looking for money, whether it's syndications on the level that Mike does or Trevor does, or some of the other people we've had on the show, or just a single deal where you're buying a 6 flat or an 8 flat or a 10 flat, and you're bringing some money into the deal, you want to be really, really conscious and careful about making sure you do everything correct according to the SEC and the regulations, which you can Google, by the way. You can look them up. I mean, you can find out exactly what the requirements are, because you don't want to get yourself in hot water. Anytime you take someone's money, whether it's $4 or $400 million, you're opening yourself up to SEC regulations, and you just want to make sure you do that correctly. And again, that's where working with a mentor, working with somebody that's been down that road, that has kinks in their armor, that's made the mistakes, is key, because that will save you not only a lot of time and energy and money, but it could possibly keep you out of hot water with the SEC, which is, believe me, you don't want to get there.
Well, that's a deal, right? As soon as you take someone else's money, you are held at a standard well above anybody else. And if you're a licensed professional, you are held at a standard way above anybody else. So those are things that you need to, just be aware of, right? And one of the issues, years ago, I moved so fast for such a short period of time that I didn't pay attention to some of the details. And I want people to pay attention to the details along the way, and a couple of those things might be just like, hey, the rent growth that we're projecting, I can't substantiate it, right? Can you substantiate the rent growth? Well, if I look at a deal today and I know that cap rates are going to continue to compress for the next, call it 2 years, right? We're seeing 3% cap rates on deals already. I know that some more of these B class assets, we're going to see 3% cap rates again, but where are they going to go? Are they going to go to 2? I don't know. Germany's been at sub 3 for 12 years, right? So are we going to play in that ball field? I don't know. So just be aware of your underwriting, be aware of the market. Let me reset this really quick. Hey, if you're joining us live on Clubhouse, good morning. Glad that you're here with us. If you have a comment or want to ask a question, you can do that in the back channel. If you are live with us on Facebook, thanks for being here today. Throw something in the chat. Let us know who's here. Glad that you are joining us this morning. There's been a bunch of people in and out. And if you're on Zoom, hey, the chat works. Let us know. How do we answer questions for you and help you out? So look forward to talking to anybody, whether now or offline. So if we can do anything for you, you can reach out to myself or Carl.
Mike, I have a question.
Yeah.
Your event coming up next week.
Yeah.
How much is it, and how do I get involved in it? How do I sign up?
Yeah. So great. Thanks for asking. So it's in Schaumburg. It's a live event. It'll be 3 days. It is Thursday, Friday, and Saturday. It is going to be a deep dive into multifamily. If you can't make the event, or, hey, some people don't want to come out yet because of the pandemic, that's okay. It's going to be streamed online. You can watch it from your house or from your office, wherever you're going to be. And if you can't make the whole event, it will be recorded. So you'll get a copy of the recording. And if you're not there, you'll get the gifts that I give away at the event as well. And
How much is it?
Yeah, I've had it out for $197. Here is a coupon that anybody can go use right now to get 50% off. So 50% off would be $148. Listen, Carl and I spent that, I think, on dinner last night for three of us.
Well,
We did.
you know, one of the things I always like to do is think about what the total cost is. And again, referring back to last week when you were talking about just those two little ideas of valet parking and selling those units, to me, it doesn't make any sense. I like to reduce it to the ridiculous. So if we took what you'd pay to get that expertise that you have, it's 40 cents a day.
Yeah.
I mean, you know, and we don't, you know, it's like, why do they even have pennies anymore in our currency? It doesn't make sense. And that's what you're talking about. You know, what gets me is people just don't get it in their heads is that you work with somebody that's done it, that knows the program and how to do it. Man, it just is so inexpensive to get that kind of expertise. And I think, to be honest with you, I think you're doing it too cheaply, but.
Yeah, you know, and listen, there was another event last week where it was, you know, $700 for the event. So, you know I'm cheap, but you know what? Here's the deal, right? I want to give away as much as I can. I want to help people grow. I want to give back and add value to others' lives, and that's what my mission is. That's what my goal is. So, you know, for $148, if you could come get 3 days of stuff that's going to take your business to the next level, then come and get it, right? And you're going to walk away. We're going to do a separate class then as a gift for underwriting, and you're going to get my institutional underwriting tool. You're going to get a copy of my book. You're going to get, you know, the checklist for due diligence. You'll get the checklist for the property management operations. There's going to be a panel on day 2. And that panel's not going to just be me. It's going to be some other people that are in the business that are having success. And I'm going to have my intern who does my underwriting or helps with underwriting. On day 3, we're going to talk about underwriting, how to use the tool, how to underwrite, how to, you know, how to bring deals to market. And then we're also going to, on day 2, Carl is going to come down and he and I are going to have a conversation for an hour about language. And, you know, we talked about that last week, and it really, really was clear about how much people need to know just about what's EGI, what's effective gross income, and where's it come from? What's NOI? What's net operating income? Why is it important? Where's it come from? And how do we use it? So those types of conversations, I think, will help people go from walking in the room not knowing a lot to going home going, oh my God, what am I going to do with all this, right? Because that's how I walk out of a seminar sometimes.
Yeah, the other thing, Mike, I just want to bring up, you know, I was having this conversation. I do business with a gentleman who wants to get into the banking business, and I was a banker for years. We had an hour-long conversation the other day about banking terms, right? And we're analyzing banks right now, and there's a whole bunch of different ways that banks are rated and you analyze a bank. And he was like, dude, this is like, he's actually married to a Chinese woman. And he said, I hear Chinese all day in my house because his mother-in-law is there. He says, I don't understand a word they're saying. He goes, Moose, I don't understand a word you were talking about because I don't understand the language of banking. And so what's my point? My point is, just by having the conversation, just being there for the conversation Mike and I are going to have about terminology, puts you ahead of the curve. In other words, when you're talking to investors or you're talking to the bankers or you're talking to someone you're buying a property from, when you speak the language of real estate, they immediately recognize that you know the language. You know, it'd be like going to Greece or Italy and not knowing how to speak the language. You're going to be lost. You go there with an interpreter or you go there with someone that's taught you the language, you're going to be that much further ahead. And that in and of itself will I guarantee you will make you your loan officer is going to look at you differently because they're going to go, oh, this guy has experience or this person has experience. The person selling you the property is going to look at you differently because they're going to be like, oh, they understand, you know, this language. Your investors are going to look at you differently. So that hour-long conversation will be worth 10 times what you pay in the tuition, and that's 1% of what you're going to get.
Absolutely. Hey, let me just do this real quick. Omar, thanks for stopping by on Clubhouse. We're talking multifamily unplugged. We're down some rabbit hole over here. We're live on Facebook, live on Zoom. If you have a question or a comment, throw it in the back channel. Glad that you're here. there's not a lot of interaction going on Clubhouse per se, but we just open the room up so that people can listen in and get their fill. But we're talking about multifamily, active, passive investing. We've covered a whole bunch of ground here today, so glad that you're here. Go ahead.
And the Clubhouse is not interactive. That's right. Yeah, if someone wants to, they have to chat.
Yeah,
or-
they
or
can
send
go to
a-
the back channel and say something, right?
So who do we have? Do we know who we have next week? What's coming up, Mike? Do you know? Oh, we're off the next couple of weeks.
No, just next week. So no multifamily unplugged next week unless you want to do it yourself. But
No, I'm going to take a break too because I'm actually traveling to New Orleans. My niece is getting married, but
that's right. That's right.
yeah. So, but again, it's interesting because my cousin, her mom, his husband is a retired Marine, and he wants to get into multifamily. So he's like, oh, I'm excited about you coming down because we're gonna, I want to talk to you about how I can get involved with multifamily. I said, and this guy's got a huge network. I mean, he's a Marine. He's got the whole Marine Corps as his network, and we're gonna talk about what and I have no idea what their financial situation is. I mean, I know they do pretty well and they've got a nice house, but I don't know where they are with any of that stuff. So I'm looking forward to that because he's a guy that's how old is Bob? Bob's got to be, he's got to be in his 50s. And he said, oh man, I've always wanted to buy a piece of investment property. I've never done it. He goes, let's go have a beer and talk about it. And so I'm excited to see him and just find out what he's doing. And Mike, by the way, he might be a guy that I'll refer to you and say, listen, I'm not as active as I was 10 years ago, but if you want to get involved or talk to a guy that's in the trenches every day, that's something that most likely will happen. I'll probably end up introducing you guys and, after I figure out what he's up to and where his head's at.
Nice.
Yeah.
Hey,
and I have no idea, Mike. He might be a guy that might want to put some money in one of your deals, or just somebody that was looking for some coaching and training, for him to go out and do it himself. I really don't know at this point.
Yeah. Well, however it shakes out. Hey, listen, we're winding down here. We're about 45 minutes in. Time for last comments and saying goodbye.
Trevor, Chris?
One of the things that I've been in the financial services business for so long. Darlene, my significant other, she does mortgages. And so one of the things that people are looking at is when they have a lot of equity in their home, when you can get, less than 3% paid on a mortgage and then turn around and reinvest it in a multifamily property and make 10, 15%. That's what I call perfect arbitrage. So keep that in mind, because you can take those assets that you still own, your house will still go up in value whether you have a mortgage or not. And now you can multiply the effect by looking at doing multifamily, by taking a refinance perhaps on your home and looking at other properties, whether it's syndicated with somebody like Trevor or doing it on your own. So that's one of the things that I would highly recommend people do, is to look at the equity that you have in your property now to do it and multiply your net worth that way.
Yeah.
With that, I'll say thanks, guys. And
Good point, Chris. So glad you were here, Chris. But Trevor, thanks for being here. I know you're on the road. Hey, good luck with that deal. I'd love to hear about it after.
My pleasure. Yeah.
Yeah, I'd love to hear about it after you look at it, and let me know if you want to, come to that event over the next week too. So
awesome. Thank you.
Yeah.
Thanks, Trevor. Good to meet you, Mike. Always, it's a pleasure.
Yeah.
Keep me posted. I'll talk to you later, and then I'll see you next week for sure. But I'm sure you and I will talk between now and then.
Yeah. What are you doing for the weekend, Carl?
My son has a hockey game, so we're gonna tomorrow. So today we're gonna go. He had practice today, and then we're gonna go skating in the afternoon, and then my daughters are the ballerinas, so who knows what they've got going. They're gonna run me around. I'm a chauffeur these days. I got teenagers.
Where's he playing hockey?
At a hockey rink.
He plays in Evanston. Yeah.
Really, Mike?
All of a sudden, he found the mute button. It's spoken like a true blind coach.
At the rink. Thanks, Chris.
Yeah, well, sharp as a warm stick of butter, Mike, as always.
Evanston, you said?
Yeah, he plays up in Evanston.
Yeah, Evanston is like Evanston is a nice town. It's inconveniently located. You know,
Yeah.
it's not easy to get there. So
Yeah, that's where Northwestern is. It's a
Right.
great little community. I like it a lot. So
Yeah.
know, and he goes to a private school up there. He said, "Dad, would you be upset if I went to Northwestern and lived in Evanston?" I'm like, "No, I wouldn't be upset at all. I think that's great. You know, find a nice North Shore girl, and you got the trifecta."
So I'm going to work hard today, and then tonight I'm going to go take a little walk down Wells Street, find a place to have something to eat outside, and you know, that's the day today. Hey, so listen, I want to thank everybody for being here. If you were on Clubhouse this morning, thank you. Glad that you were here. Watch for Carl and I to have frequent meetings, maybe even some pop-up meetings on Clubhouse coming up, because we're going to be talking about some different topics, whether it be Think and Grow Rich and focusing on your mindset to multifamily or real estate. You know, I had a very interesting real estate conversation with somebody this morning about knowing your numbers. All successful people, all successful businesses know their numbers. And when I was on the sales side, I knew my numbers. I knew how many dials to get contacts, to get an appointment, to get a listing, to get a sale. I knew what that took. And, you know, that was a conversation I had this morning. I think we're going to have some more of those conversations about sales skills. How do we build it? So we'll bring some more value. Hey, if you were on Facebook this morning, Elizabeth, good to see you. Larry, Mark, good to see you guys here this morning. Peyton, glad that you were here. Want to just give you guys a big shout out. We're here every Saturday, 10 o'clock. And if we're on Zoom with us, thank you. We always appreciate your participation. And if you know where our guest is, tell them that we missed him.
I'll be in touch with them. Yeah, and we want to say there were some people on Clubhouse that popped in and out. Omar, John, Jill was there. Sally was there earlier. So thank you for popping in. Michael
was there, yeah, for sure. So, all right, hey, have a great weekend, everybody. We're gonna click out. 5, 4, 3, 2. Have a great weekend.